Welcome to Be the Bell. I'm Dominique Broadway, and you guys, this is not your average Monday market preview. We've got the Fed making their final decision of 2025 on Wednesday. Netflix just shocked Hollywood with a $82 billion deal that's rewriting the entire entertainment industry's rulebook. And we've got major earnings from tech companies that could set the tone for how your portfolio performs heading into 2026. So this is one of those weeks where what happens on Wall Street is going to directly impact your wallet, your investments, and honestly, your money strategy for the upcoming year. So grab your coffee, your notes, and let's break down exactly what you need to know to stay ahead of the bell this week. All right, let's start with the big one. The Federal Reserve's final meeting of 2025 is happening this Wednesday, December the 10th. So here's what's expected. The Fed is likely to cut interest rates by a quarter point. That's 25 basis points for those keeping score, which would bring the Fed funds rate down to somewhere between 3.5 and 3.75%. This would be the third consecutive rate cut that we've seen, but here's where it starts to get interesting. So the decision is actually pretty controversial within the Fed itself. You got the Fed officials on different sides of the debate. Some are saying, hey, the labor market is weakening. We need to cut rates. Others are saying, hold up, hold up, hold up. Inflation is still at 2.8 to 2.9%. That's way above our 2% target, and maybe we should pump the brakes. Now, why should you care about this at all? Because this Fed decision touches everything in your financial life, your savings accounts or CDs. So if the Fed cuts rates, the highest or the interest that you're earning on your high yield savings is actually going to come down. So if you've been enjoying those 4 or 5% rates, enjoy them while they last, okay? Your mortgage and credit cards, those lower rates could mean slightly, could cost you lower, right? So your borrowing costs would go down. So if you're looking to refinance or buy a home, this could be good. But don't expect any miracles, okay? We're talking about just a quarter of a point here, nothing major. So your investments, in other news, here's the interesting part with those. The market has really already priced in this upcoming rate cut. So it's at about a 87% probability, according to future markets, that this rate cut will happen. So the real story isn't whether they will cut rates, it's what Federal Chair Powell says at his 2 or 2:30 p.m.-ish press conference after the decision. So Powell's going to release what's called the dot plot. Basically, the Fed's forecast for where rates are headed in 2026. So this is what you need to pay attention to because it's going to tell us, are we getting more rate cuts next year? Or are we pausing? Are we potentially raising rates again if inflation starts to stay sticky? So here's what I am watching for your money. So if Powell signals that they're going to slow down rate cuts in 2026, that could actually help your fixed income investments like bonds and CDs because rates might stay higher for longer, but it might put some pressure on growth stocks, so especially tech stocks that love low interest rates. So, if Powell suggests that they're going to keep cutting aggressively because the job market is weakening, that could be good for stocks in the short term. But it also means the economy in general might be way shakier than we thought. So, the bottom line is that you should not make any major portfolio moves right now. Wait for Wednesday's decision and especially listen to Powell's commentary. Then we'll talk about it on Friday's episode about what it actually means for your 2026 money strategy. All right, let's talk about the deal that has all of Hollywood all shook up right now. So on Thursday, which was, I guess, 3, 4, 5 days ago, Netflix announced that they're buying Warner Brothers, Discovery Studio, and streaming assets for $82.7 billion. Let me say that again. $82.7 billion. So for context, that's more money than the entire GDP of countries like Kenya or Guatemala. This is massive, you guys, massive. So here's what Netflix is getting. They're buying Warner Brothers Studios, HBO, HBO Max, DC Studios, so that's Batman, Superman, Wonder Woman, all those superheroes, and the content libraries from some of the most iconic shows and movies ever made. We're talking Sopranos, Game of Thrones, Friends, Harry Potter, The Wire, Casablanca. I could go on for days. Now, why does this matter to you and your money? Well, first, three reasons. First, we have three reasons. First, if you're a Netflix shareholder, this is Netflix's first major acquisition ever. They've historically grown super organically, but now they're making a really big bet. The company is taking out a $59 billion bridge loan to help finance this deal, and that is a lot of debt, okay? You need to watch how this affects Netflix's cash flow and whether they can actually integrate all these assets without hurting their core business. So the deal won't close until late 2026 or early 2027, but the stock price is definitely going to be volatile based on all of this regulatory news. Speaking of which, the second thing we need to worry about is regulatory risk is real. So this deal also has to get approved by federal regulators, and there is a lot of opposition that they're facing. So theater owners are furious because Netflix historically doesn't release movies in theaters for long. The Writers Guild says that the deal should be completely blocked. Even senators like Elizabeth Warren and Bernie Sanders have raised concerns about monopoly issues, which are very valid. So Netflix is offering a $5.8 billion breakup fee, which tells you they know this deal might not go through. That's basically saying if regulators kill this deal, we'll still pay Warner Brothers nearly $6 billion just for trying. Just for trying. Can I say that again? $6 billion just for trying. So, number three, this is about the future of entertainment consumption. So, this deal is basically Hollywood's official acknowledgement that streaming has won. Okay. The traditional movie theater experience, cable TV, the way that we've consumed entertainment for 100 years is fundamentally changing. From an investment perspective, if you hold media stocks like Disney, Comcast, Paramount, you need to be paying attention because this Netflix Warner Brother combo creates a monster competitor. Netflix would have over 30% of the streaming market. That's going to force every other company to figure out their survival strategy. So, my take for your portfolio, if you don't own Netflix, I wouldn't rush to buy it right now. There's too much uncertainty with this deal. If you do own it, don't panic sell, but definitely pay attention to the regulatory process. This could take 18 to 24 months to play out. If you're thinking about the entertainment sector in general, remember, content is still, and probably will be for a while, king. But distribution is becoming the kingdom. The companies that control how we watch content are the ones with the power now. Okay? All right. So we are coming down the home stretch of earnings season, but this week is bringing some remaining heavy hitters that you need to know about. On Wednesday, December the 10th, which is the same day as the Fed decision, oh my gosh, crazy, right? Oracle is reporting before the market opens. So this is your enterprise software and cloud infrastructure play. So if you've got Oracle in your portfolio, or if you're thinking about the broader tech sector, you want to see strong cloud growth numbers. Oracle's been positioning itself as an AI infrastructure provider. So watch their commentary about AI related revenue. Then we have Adobe. They're going to be reporting after the market close. So Adobe is interesting because they're a creative software company that's trying to integrate AI into everything, Photoshop, Illustrator, their whole suite. So the big question is, are customers actually paying for these AI features, or is Adobe spending billions on AI that isn't even moving revenue? Both of these are reporting on the same day as the Fed decision, which means their earnings reactions could be amplified or completely muted, depending on what Powell says. Interesting timing, right? Yes. Thursday, December the 11th, Broadcom. Now, this is a major one for the AI semiconductor industry or story. Broadcom makes AI chips and recently acquired VMware for their software business. Analysts are looking for data on whether AI infrastructure spending can sustain these massive levels that we've seen, or if companies are starting to pull back. So Broadcom's results are going to tell us a lot about where AI investments are headed in 2026. Costco, which is another favorite stock of mine. Now, this is where we get real about consumer spending, right? And their sales are up 8% year over year, and whether e-commerce sales surging over 20%. So when Costco reports quarterly earnings, we're looking at Are everyday Americans still spending? Are they trading down to value retailers? And then how's that membership model actually holding up, which has been really big for them? Costco is basically a really good temperature check on the American consumer. If Costco is struggling, that tells us that households are tightening up their belts, okay? If Costco's thriving, Americans are still shopping. So, what does this mean for your portfolio? These earnings are going to tell us two critical stories. Is the AI boom sustainable, right? Oracle, Adobe, and Broadcom will answer that question. If these companies are showing strong AI related revenue growth and raising guidance, that's bullish for tech stocks in 2026. If they're tempering expectations, we might see a tech pullback. So, can consumers keep spending? Costco's numbers are going to tell us if the American household is still healthy or if we are starting to see some cracks. Remember, consumer spending is about 70% of the US economy. If that weakens, then you guys, everything else will start to follow. So, here is your wealth checkpoint for today. I want you to do something for me this week. I want you to run a quick portfolio checkpoint. And yes, I'm talking to you. Here are 3 questions I want you to answer honestly. Question 1. Do you even know your current asset allocation? Like right now, what percentage of your portfolio is in stocks versus bonds versus cash, or is it all just sitting in cash? If you don't know the answer, that's your first homework. Log into your accounts, your investment accounts, your retirement accounts, whatever, but I need you to figure it out. Okay? Question 2. If the Fed keeps cutting rates and inflation stays elevated, are you positioned for that scenario? So are you 100% in growth stocks that might struggle? And then environment. All right. Question 3. How much of your portfolio is tied up in tech stocks right now? Because with these major earnings this week and the Fed decision, tech could get a little volatile. And some of us like the volatility, some of you may not. So you may want to just know where you are. All right. So we want to make sure that you're not overexposed to one sector. And I want you guys to text me 202-217-1035. All right. And let me know what's the one question you have about your money strategy for 2026. I'm reading all your texts and I'm going to address the most common questions in an upcoming episode and probably respond to you via text as well. All right. So here's what I need you to remember from this episode. Number 1, the Fed decision Wednesday is likely a 1/4 point rate cut, but the real story is Powell's 2026 guidance and what he's anticipating to happen next. That is what is going to actually move your portfolio. Number 2, the Netflix Warner Brothers deal is an $82.7 billion earthquake that's reshaping all of entertainment as we know it. But it does still have major regulatory hurdles. So if you're a Netflix shareholder, buckle up for a long and bumpy ride. All right. Number 3, this week's earnings from Oracle, Adobe, Broadcom, and Costco are going to tell us if AI spending is sustainable and if consumers are still healthy. And we have tons of other companies reporting this week as well. But these are some of the major ones I want you to keep your eyes out on. Both of these answers do matter for your 2026 investment strategy. Number 4, don't make major portfolio moves until after Wednesday's Fed decision. We want to let the dust settle. And then we're going to talk strategy on Friday's episode. All right. So before I let you go, I've got something exciting to share with you. You know how we talk about building wealth, making smarter money moves, and getting your financial house in order? Well, I am inviting you to join me and our community for something special. This is the Demystified Collective 30-day sprint. Now, this is not your typical finance program. The collective is our community of first generation wealth builders, people just like you who are done waiting for permission to build the life that they deserve. So here's what happens in the 30-day sprint. We're diving deep into actionable wealth building strategies. Every single day, you're going to receive an email with exactly the steps that you need to take, one little nugget to accomplish every day. And we're connecting you with other people just like you on the same journey. Okay. So we're breaking down exactly what you need to do to set yourself up for financial success in 2026. No fluff, no overwhelm, just clarity, community, and a clear roadmap. And listen, with everything happening in the market right now, the Fed decision, interest rate changes, potential recession talks, this is the time to get your strategy locked in. Not next year, not eventually, right now. So if you're tired of feeling confused about money, if you're ready to stop guessing and start building real wealth, if you want a community that gets it and actually supports your goals, then the Demystified Collective is for you. I'm going to drop the link in the show notes. And guess what? It's only $1 to get started and kick off your own 30-day sprint. Or you can text me at 202-217-1035. I'll send you the details, or you can look for it in the show notes. So this is the investment in yourself that's going to pay you dividends for years and years and years to come. All right, that's all you need to know to beat the bell this week. Wednesday's Fed decision, Netflix reshaping Hollywood, and major tech earnings. This is a week that's going to set the tone for your portfolio heading into the new year. I'll be back Friday to break down everything that happened and what it means for your money going forward. Until then, stay informed, stay strategic, and remember, building wealth is a marathon, not a sprint. I'm Dominique Broadway, and I'll see you soon.